Welcome to the Small Giants Virtual Workshop.
Thank you for joining. We hope that you're all staying healthy. We've all been hearing about and talking about the new normal, these unprecedented times. So today we're going to talk about the impact of that on the financial state of our businesses, but also the future financial state of our businesses. So we have three experts who are going to help us today. They've graciously volunteered their time and their wisdom. So we'll meet them in a little bit more depth in a minute, but just to kick it off, we have Chris McKee. These people are probably also towards the top of your screen, Wayne Titus and McKee. I'll let them introduce themselves in just a minute. But before that, I thought we'd also get to know each other, not like any type of get to know you game, but just showing you a couple numbers, so don't worry. So in the registration for this, we asked everyone to tell us just kind of what's the state of things right now. So just to give you an idea of people who are on the call and people who have registered, who are waiting for the recording. So 77% of you have applied for a PPP loan, so a vast majority. 22% over the past couple of months because of the crisis have laid off or furloughed employees. 41% reported that the state of the business is business as usual, so that was good to hear. And unfortunately, 2% have closed their doors in the last couple of months. So that's just to give you an idea of who we have on the call, the state of everyone's businesses, and what we're going to be talking a little bit about and focusing on today. So with that, Chris, I'm going to pass it over to you to do some introductions and get us going.
Okay, that sounds good. And I guess I'm your moderator for today, so I'll be moderating the discussion, then I'll weigh in on a few things as well. So I'm Chris McKee. I'm the founder and managing partner of Maturity Financial Partners. We are an outsourced accounting firm here in Dallas. So if you have an accounting department at your company, that's basically what we do. We just do that on an outsourced basis. So our clients have us instead of an in-house accounting department. We're based in Dallas, Texas. We've got about 50 folks, and we're about a $6 million company. That is us. So McKee, why don't you tell everyone a little bit about yourself, and then Wayne.
Yeah, thank you, Chris. I'm McKee, the CEO of McKee and the Prosperity People. We're a $2 million, 12-person firm working in Northern Kentucky with clients across the U.S. Our mission is to help family businesses through generational succession so that Gen 1 gets what they want and stays in control as long as they want. Gen 1 and 2 feel confident in their finances and both have certainty that the business will continue. Great to be with you.
Yeah, hi, and I'm Wayne Titus. I'm founding partner of AMDG Financial, and we have a tax and accounting firm, AMDG Business Advisory Services. Those two businesses work together to serve entrepreneurs and families to integrate the tax, financial, and investment strategy. You know, it's not what you earn in the markets, it's what you keep after taxes that's important. And so we provide that through our holistic advice, the only advice to the marketplace.
Sounds good. Sounds good. So the way this is going to work is I'm going to pose a few questions to Wayne and McKee, and I may weigh in on a few of them as well. And these will be some questions that we've come up with in advance, and also some questions that you guys have submitted as well. But as Rachel mentioned, feel free to submit any additional questions that you have as we go along through the chat, and we'll try and work those in as well. So I thought we'd start out kind of getting an idea of, from Wayne and McKee, in terms of the general outlook that you guys are seeing going forward. And I'd like to know a little bit about, you guys each have a client base in your various, in your businesses. I'd like to get a feel for how your client base has been impacted by this COVID crisis so far. The ones that have been severely impacted, not impacted, I think that would be informative, because I think each of our businesses sort of represents a cross section of small to medium sized businesses as well.
Chris, do you want me to go first?
Yeah, go ahead. That's fine. McKee, why don't you jump in first? Sorry.
Our clients are both, we've gone from shut the doors and they've been shut for 3 months to actually having more business than they know what to do with. and everything in between. So people are, I mean, I think we triaged our clients from the very beginning and said, who's going to be in crisis right away? And we began looking at cash position, cash reserves, keeping people in business. And our motto was thrive to survive, or survive to thrive. And I believe that we're not moving into the thrive yet for most people, but I think we're getting close. We're beginning, I think the marketplace the overall economic market will rise all boats as the year goes on, and especially into next year.
Wayne, what do you think? What are you seeing with your clients?
Yeah, we do serve clients around the country. So, and what we do see is impact is different state to state, but the general trend is pretty similar. We all went from business as usual to wondering how we were going to stay in business, and that happened kind of overnight, right? I mean, things just came to a screeching halt. We've had clients from people that we know that closed the doors of their business and don't expect that they'll be reopening them, to clients that have had no financial impact and in fact are growing, like IT companies right now. Some of our IT clients are actually growing and have more cash reserves than they've ever had before. So it really kind of crosses the gamut. There isn't one solid, solid situation, but we're seeing everything across the board.
Yeah, I think that's similar to what we're seeing. We've got about 120, 130 clients. Most of them are here in Texas, but we have a few kind of scattered around the country. And I think we were uncertain as to what the impact was going to be. Probably thought it was going to be a lot worse than it was. We have had a few clients who were obviously completely impacted and had to shut their doors right away. Some of those have actually come back, some that we didn't think would come back at all, particularly those in the restaurant business. And I think the PPP funding that we'll talk about in a little while really helped out with that. And then the majority of our clients have been slightly impacted negatively to kind of hanging in there for the most part, and not that impacted. And again, a few that were that are doing well. Counterintuitively, we had a client in the fitness equipment industry, their retail shop, and they really suffer in economic downturns because it's a discretionary purchase, excuse me. So I thought they were going to really be in trouble, but when all the gyms closed, people didn't have an alternative, and so they sold they've been selling tons and tons of equipment. So they've actually had the best few months of their entire existence, which is kind of crazy, which we didn't expect. So that's been nice, but it has, we had a similar experience. It's kind of all over the place. So what do you guys, before we get into some of the other questions, what do you guys kind of see over the balance of the year? Wayne, what do you see? What's your crystal ball say? It's funny because it changes almost daily, but certainly weekly. So.
Well, yeah, and the rules seem to change overnight too. Last week the Treasury Department just came out with their 19th interim rule on the PPP program, and so things have been progressing. The rules are changing. The ground is shifting under our feet. I don't think you'll probably see that slow down through the end of the year. I think there's going to be some continual fits and spurts for things. The market seems to indicate that forward-looking, the economy's on pretty solid footing, but I would venture to say that many entrepreneurs don't feel that, right? And that's the difference between economy and market, right? Our economy right now potentially is in recession. We don't really know, and we won't really know until we look backwards at it. So we may be in recession right now, but looking forward, it doesn't seem like our economy's in recession. That's because we're looking at the market. So I'd say, I think you're going to probably still continue to see some improvement in the markets. They're going to continue to be volatile because I think there's a lot of emotion that's continuing to drive things. There's new information that's coming out about the spike in COVID cases. And is this the second wave, or is it really still the first wave? Who cares? It's a wave and we're all being impacted by it. So I see a lot of maybe uncertainty through the end of the year, but I think markets are going to continue to progress.
McKee, what do you think about the economic outlook for the balance of the year, kind of general outlook?
I think in general I think the 2020s we were setting the stage to be positive because of all the shifts that were occurring already. And this has been actually a time that put a lot of those shifts on steroids. And then what you're seeing is an increased acceptance of change, an increased acceptance of technology. And so I think we'll have in the short term when the PPP funds begin to run out, which you can still apply for, but for those people that already got them and they've used them up, and for unemployment, when the unemployment runs out for people, the extra unemployment, you'll see discretionary spending go down. So I think we're likely to see a little bit of a like again, not as bad as we had. We'll see what happens, but overall, I believe that the economy will continue to grow, and of course, it will grow much better when we actually have a vaccine and people feel confident moving from place to place. But I think as business owners, the most important thing is to look at the ability to reinvent and to recreate your marketplace in this environment. Because I don't think there's ever been a time, if you want to change something in your business, I don't believe there's ever been a time in my history that it's been as easy to do it now. People are not change adverse. Everything in their life already just changed. So if you want to try out a new revenue model or a new cost structure or whatever, try it. And if it doesn't work, people will forgive you. So this is a good time for experimentation and I think trying out, things that you want to try out, no matter what they are.
Never waste a good crisis, as they say.
Never waste. That's right. That's right.
So one of the questions that's come in is for each of our businesses, our client base, how do they represent small giants, or how are small giants represented in there? And I'd say our types of clients for my business are primarily small giant type companies, and then we have some folks who are actually in small giants as well. Most of our clients are under 20 million in revenue, and our typical kind of best client is a $4 to $8 million owner-operated business, 5 to 50 employees. So very much the heart of kind of the small giants community. Wayne, what about your group of clients?
Yeah, I'd say our group of clients is primarily entrepreneurial based clients with businesses anywhere from $6 million and down in revenue, with a real focus on kind of smaller employers, interested in retirement plans for themselves, for their workers, for tax and accounting work, for financial and investment integration. Those are our kind of key clients.
McKee, how about you?
Chris, our client base would look a lot like yours, and typically under 20 million or under 30 million, very purpose-filled businesses. And if they're not, we try to get them back on purpose, because there's nothing worse than spending all your day doing something that doesn't feel like enlightening and fulfilling. So very much in alignment with what you said.
Very nice. All right, well, good. Well, so I'll put this one to Wayne first, and this was one of the questions we received from folks joining the session today. Someone said our revenue is down, but we managed by decreasing hours, not headcount, and by taking a PPP loan. Our concern is for the next 6 months after the PPP runs out. It'll run out. It will end on 6/5. Any advice as the PPP runs out, and any advice for them and their business?
Yeah, so it sounds like they were probably one of the first folks in that first wave. If their loan forgiveness period ends June 5th, then they made that application and had that deposit like on, around April 5th, which is like the first day of the program. But I think it's important to know that the program's changed, and maybe they're not aware of some of the changes that occurred. You can, even if you got funding under the first tranche, you can elect to have your forgiveness period extended from 8 weeks to 24 weeks. And then if the money that you have, 60% of it can be used for payroll expenses instead of 75% before. And 40% can be used for utilities, rent, mortgage interest, instead of what was previously 25%. So the changes in the rules have actually been more favorable and maybe even beyond what Congress intended at first. But I think that the important thing to understand is make sure you know and understand what the changes in the new rules are and how they might affect you. And that you're working with an advisor that knows and understands what these differences are, because that can make a pretty significant difference if you're going to send money back that you could have used for expenses over the next, up to 24 weeks from the time that you took that loan. So it's important to understand what are those changes and how are they impacting you, or how might they impact you more positively. Beyond that, I think that, we may still see some changes. There's some conversation about adding a second round of funding, or I should say really this is the third round of funding, but a second round for people that got PPP loans in the first or second tranche. So there may be a second round of funding that you may be able to apply for an additional PPP. So keep your ears open and let's see what happens over the next few weeks in Congress.
McKee, what about for someone who's getting toward the end of their PPP funds, whether it's 8 weeks or 24 weeks that they've been allowed to spend them? And this would be somebody, perhaps this person in this situation, what's some advice from a business perspective on what moves they could be making or should be making?
Okay. Well, I think Wayne did a good job of summarizing some of the things to think about with the PPP. I would add that I think cash management and cash monitoring are super important. Mm-hmm. I'm a fan of weekly cash monitoring in all environments, good, bad, and indifferent. And we do it through a tool called Cash Headroom. But also in bad times, I'm a big fan of cash forecasting. And we work with our clients to do a 16-week forecast. It's a little tedious, but once you get it set up, it's easy to update. And it can really help you sleep at night because you have a little more peace of mind knowing where your cash is going to be. Because let's face it, that's what you've got to do, is figure out how you're going to make it from a cash perspective. The last thing I would add is to think about applying for an EIDL loan. The EIDL loans applications are back open. These are not loans subject to forgiveness, but they are loans that are very affordable. I think it's 3.75 and you pay back over 30 years. So if you have one of two things, a growth opportunity you'd like to fund, or you're uncertain about your own cash future for the rest of this year, applying for an EIDL loan direct to the SBA might be a very good opportunity for you.
Yeah, good stuff. I think, and with our clients, we're really talking to them, and we've really tried to talk to them from the beginning with these PPP loans and other loans. So look, you need to look at your business and make good business decisions and isolate those decisions from these grants and loans that you're getting. Because if your revenue's down and it doesn't look like it's coming back anytime soon, keeping people on board just to get forgiveness of a loan doesn't make a whole lot of sense. I mean, you need to match your cost structure to what your revenue structure is or what you expect your revenue to be. And it's hard to know in this environment, but a lot of our clients have a pretty good idea that their business has, for all intents and purposes, permanently shrunk by a certain amount, at least in the near to medium term. And so, we said, if you think it's going to come back, then you think you can keep the people on board and you'll need them, do that. But if you don't think it's coming back, make a good business decision and worry about debt forgiveness later, because all that stuff will take care of itself. Run your business to run it as a good business and get it profitable, and minimize the number of loans and things like that you need to take so that you're positioned well for the long term. So that's a lot of the conversations that we've had, because that's what's been really hard for some of our clients is okay, I got this big chunk of money, but I'm losing money every day that I'm open because my revenue is down. Should I keep people on the payroll in order to utilize all these funds? And we really tried to say, make the business decision you would make in the absence of these funds, and then we'll figure out how to best use the funds. And I think we've all been very fortunate with them extending this period of 24 weeks. I will say almost all of our clients, if not all of them, will be able to utilize all of their funds, regardless of whether they laid off people or not. And if they have to return some of the funds because they laid off people, that's fine. It was found better to do that than pay it out and not have to pay it back, or something along those lines. So that's been, for what it's worth, our advice to some of our clients is you still have a business to run, and focus really on that. So All right, we had a question on future shutdowns, which is kind of interesting. So this person said they were concerned about future shutdowns and how to prepare for that. Should they bring in outside equity or debt? What other preparations should they add? And it's funny, here in Texas, that's getting to be more and more of a possibility. Just over the last few weeks, we had a really relatively low case volume for a while, and it's really kind of stepped up, especially over the last couple of weeks. And they've put some restrictions in place, and it looks like we might be headed toward some limited shutdowns, especially here in the Dallas area. So it's real pertinent. So, McKee, what about preparing for future shutdowns? What are your thoughts on that? So.
Well, I would say wear your mask. That's turned into a political nightmare, but for some reason. But again, going back to cash management, if you're thinking short-term shutdowns, for certain, be sure you're managing your cash. And I totally agree with Chris, making a good business decision. Do not keep people on your payroll that you do not need or do not have a purpose for. That doesn't mean that you might keep somebody on if you have a PPP loan to help you reinvent something about your business and to do some innovation. If you have something specific for them to do, but don't keep people on just to use that money. So use the money wisely, apply for the EIDL loan, keep your options open. The more cash you have in the bank, the better. So watch your receivables. People go to operational. How do I reduce my expenses to save money? That's important, but how do you look at your balance sheet? If people owe you money, or can you extend your payables? Can you apply for a renewed line of credit? What are the opportunities on your balance sheet? Don't forget to look there. So keep your options as flexible as possible when it comes to your own cash position.
Yeah, and I'd say the same thing, Chris and McKee, that you're saying is, cash is king or queen, as you want to call it. It's important to know and understand where the cash is coming from, what your opportunities to change your payment terms are. Because we're all in this situation together, people expect that terms are going to change. And if you can get somebody on a credit card payment instead of waiting to write a check, I think it's important to evaluate and get those understandings in place right away. I think, Chris and McKee both said too, make good business decisions. Don't use these loan proceeds just to keep people on payroll or try to obtain some sort of forgiveness. That's not a good business decision. It's better if you can sit back and review objectively, what do you need to do to triage your business? And if we've got a second round coming or, additional impacts ahead of us, the last thing you want to do is worry about using that money for forgiveness. So what if it goes past the 24 weeks? The PPP, I would never send any of that money back or advise any client to send that money back in the way that the environment is right now, because we are uncertain. If you don't use any of that money for forgiveness, it's a 1% loan that's now been extended to a 5-year payback. Why send the money back? Who cares if you get forgiveness if you can keep that cash reserve to help you through the next, X number of months or year if you need it. Make those business decisions based on a longer term understanding of how to keep your business going. Because if you're the last business standing, you're going to get all the business. So, as they say, that funny cartoon where the guy's reaching down to take off his sneakers with the bear behind him, and the other guy saying, "Why aren't you starting to run?" Or he's putting his sneakers on. Excuse me. He says, "All I have to do is outrun you. I don't have to worry about outrunning the bear." Right? That's all you have to do. Is you have to just make sure your cash is there in the future.
Yeah, I think that's all great advice. It's again positioning your business as much as possible so that it's hard to know what really is going to happen. It is a pretty uncertain environment, and so to be kind of as conservative as possible with some of those decisions would be the way that I would go as well. Wayne, so a question that someone had is how to be nimble enough to respond to kind of these various levels of demand. And I tell you, we've even seen it in our business since this started. We lost some clients right away, and we're considering whether we needed to let some folks go. And then within 30 to 45 days, we actually had some of those clients come back because of sometimes PPP loans, sometimes they reinvented their business. And we were glad we didn't really cut back because we needed the people to do it. It's hard to forecast what it's going to be. So what advice do you have on being nimble in this environment to respond to sort of the variations in demand?
Well, I'm going to try to compare nimbleness to a video game that I used to play as a kid called Pitfall. I don't know if any of you played that game or know what it is about, but basically your character is running down the hallway. You've got these logs rolling out. You got these big pitfalls in the floor. You got to jump over those logs. You got to jump over the holes. You don't really know what's coming next, right? And so you can kind of trust your gut. You can develop muscle memory. But the bottom line is business isn't really like that. You can kind of prepare and try to be as nimble as possible to, tackle those challenges. To me, I think it's most important when you're trying to be nimble is to get some outside help. I watched my dad's business fail because he had a bad advisor. And that's what actually inspired me to become a CPA. I thought, if that jerk can be a CPA, so can I. And good business advice can't be underestimated. And if you're going to be nimble in your business, you need outside advice to help you, digest this terrain that you're trying to overcome. And so I'd say, if you want to be nimble, make sure you're getting some good outside advice from an advisor that's going to, be with you. If your advisor hasn't been talking with you about the PPP or EIDL loans, you got to be asking yourself, what am I getting out of this relationship? They should be there helping you map that out, helping you become nimble and overcome those obstacles that you're facing.
McKee, what about some thoughts from you on kind of how to be nimble and prepare for kind of changing demand, changing environment?
I think Wayne gave us some great ideas. And what I would add is, we think about accounting and we think about numbers and we think about what our accounting reports, and those are all past. So those are looking behind us. So you also have to be looking forward. So I as I said earlier, I'm a believer in cash forecasting, but also you should be forecasting your sales, forecasting your cash, and forecasting your income. So all of that is a little bit challenging to get up and running, but once you get those systems up and running, you'll have a lot more confidence. It won't take you long to update them. You'll be able to see where you're going to be and predict what your future will look like. And only by beginning to look forward, not just in the past, can you really be nimble, I believe. Is that you've got to be able to see what's coming at you or what's your best guess today. That doesn't mean it's going to happen just like that, but you will be surprised at how much better you and your team. And I encourage also team involvement. This is not a solo sport. This is a team sport. Business is a team sport, which so often entrepreneurs feel isolated. They go out there, they do everything on their own. They, win the prize for being sacrificial. So get your team involved and become, part of, let them help you. They've got great ideas to bring forward. So if you just open your mind to their ideas, you might be surprised.
Yeah, can I tag on to that? Because I think it's important. Entrepreneurs generally go with their gut on a lot of stuff, and because that's kind of their business, right? And that is what makes us nimble. Going with your gut is a good thing. Being able to see around corners is difficult. And that's where, McKee, I think you're exactly right, is, looking forward, trying to anticipate what's coming, what's off screen, what's around the corner, from sales forecasting, cash forecasting. You're exactly right. That's stuff that as an entrepreneur, you need to be working on with your advisor.
Business owners so often treat this as a luxury. This is a necessity. Good data is a necessity, is the baseline. Until you have that, you're just shooting in the dark.
Yeah.
So get your act together, both past data and future data.
Yeah, that's really actually right on point with the follow-up question that somebody had around what we need to be looking at going forward in order to be nimble. They said, this is a follow-up question from one of the attendees that said, you need to be watching what's on the horizon. And I think, McKee, you and Wayne both kind of hit that really well. Keeping an eye on, keeping an eye on your sales pipeline, on client attrition, or customer attrition. Those are some two kind of key metrics, I think, to look at. I'll tell you, in our business, when we kind of went into this thing, we have two things. One thing, we we sort of put together sort of different scenarios. So we had sort of a downside plan. What happens if things really go south? What do we do if things sort of stay the same? And then what do we do if we actually see an uptick in business? And then we figured out what the, I guess, signposts were for each one of those. Okay, if we lose this much business, then we need to put this downside plan in place. Or if we lose this much business and sales fall off by this much. And that was sort of what we did really the second half of March. We spent time putting together different scenarios. So that really helped us. We were fortunate in that the downside scenario, we just sort of put in the drawer. We never had to open that drawer, but it was good to know that if we had to open the drawer, we had something there to look at. And so I think as management teams, not just the entrepreneur, but their management team needs to be looking at different scenarios, and that's how you're prepared to be nimble when different things happen, and know what, you know, for your own business, decide what those signposts are. I think that really helps. And then the last piece that's really helped us is we're open book management through the Great Game of Business, and have been for about 3 years. And I know a lot of small giants companies are open book management. And McKee, your point about getting the team involved is right along the lines of open. I mean, that's one of the great things about open book management. And for us, our team became engaged really quickly once they started to see some of our clients going away that, hey, we really need to get out there and protect revenue and find things that we can do for our clients who are still around that can keep revenue up while we work our way through this. So those are some things that in our business that's really helped. So, all right, so those are some great thoughts on staying nimble. So I think there was a question around kind of keeping revenue at satisfactory levels in order to keep employees. Like, what are the things that we can really do to protect revenue? That's kind of a phrase that we use a lot around here. McKee, what do you think as you're advising some of your clients and kind of this, especially in the CFO role that you guys play for some of your clients? What are some of your thoughts on protecting revenue and keeping revenue up to kind of protect that core business?
That's a great question, Chris. And I would also kind of piggybacking on what you said a minute ago. Entrepreneurs are great doers, but they put off planning, because you said I did the plan, but I never have to use it. But planning saves you time and effort because you've thought about it before you do it. So the same is true for revenue. So how do you think it through? I just did a blog post series on 6 ways to generate revenue. So some of the things I talked about in that were collaboration. We at McKee and the Prosperity People, we're working on some new collaborations, one with a firm in Chicago, one with a local nonprofit here, where we're co-branding and doing some things together. That's a little more of a long-term play. It's not going to raise revenue tomorrow, but I believe that collaboration and partnership, unique partnerships are a way for the future and an opportunity for you to give back sometimes when you're doing that as well. But also, we have a tool called the 4 Ways to Grow Your Business. And the first one is, of course, new customers. And that's what everybody goes to. But that's the most expensive way to grow your business and the longest, right? So what are the ways that you can do business with people more frequently? And what are the ways that you can increase the average sale? That looks like, I mean, we've all eaten a fast food at least some of our life, right? So you go to the fast food place and they say, do you want to do you want to upsize or supersize or, have a value meal or whatever? Those are ways. How can you bundle what you offer so that people buy more when they buy? And how do you get them to buy from you more frequently? If you can focus on those 2 strategies for building your revenue, you will move your revenue forward much, much faster than just focusing on the next new customer, which is super important. I'm not saying that's not important. I'm just saying that is not the short-term play. The short-term play is selling more to existing customers on the average sale and more frequently. So I think that would be what I would first start with, is those 2 strategies, and then see where you got. Again, get your team together, do some innovation, try it out. I had a family entertainment business. They had the door shut for 90 days. They've been wanting to try out a new revenue model. We helped them put it together. And actually, if this new revenue model comes off, they will be making more money than they were ever making in the past, especially based on volume, because their average customer revenue will have increased by 20%. And they opened their doors, they tried it out, people love it. Again, try something new. This is a time where people will forgive you if they hate it, and you can always go back, but try something new. You never know. So
I'd
those are
say,
my advice.
yeah, even to take it even further, bringing in more revenue is always better. And as McKee said, you can do that in a number of different ways with new clients or from existing clients through referrals or centers of influence. All of those things you should be exploring on how to expand that opportunity. But I think the other thing is people are looking at their businesses differently. We have clients that have never had online presence before. One yoga studio client, they went right to a online class model, and they've actually probably shut their doors completely now, and they're continuing online classes. That may not continue forever, but I think it's an opportunity to start to experiment with different ways of doing business. We have larger manufacturing companies here in the state of Michigan who have determined that most of their engineering staff are now going to be on permanent remote worker status. So it's not just about the revenues and bringing in the revenues. It's about how can we look at the expense side of our model and really change that up, right? Right now, how are we doing business? It's all remote. Why couldn't we do that moving forward? Would we be able to save expenses? What things can we leverage to move that forward into the future? And is it going to continue to be an acceptable way of doing business at a lower cost? So it's not just on the income side, it's on the expense side. And focusing, looking at both of those things is what's going to provide a healthy balance sheet moving forward and be able to provide that opportunity to do contingency planning, which many businesses didn't have in place for this particular event. So I'd say look at both sides of the equation, not just revenue, but on the expense side as well.
Cool. I'd say something that our business is a little bit of addition by lack of subtraction is what I'd call it, which is, we spent a lot of time over the last 12 to 18 months focusing on our client relationships. And for us, there's a certain amount of, we can't grow if we're losing clients faster than we're adding clients. And I think a lot of businesses have to think about that as well. They're focused on the inbound, but they're not really focusing on the clients they're losing or customers they're losing out of the back door. So, there are certain companies or certain customers that you're going to lose because it's uncontrollable. They've gone out of business. There's nothing that you can do. Or if you're a retail customer, they don't have the money to spend. But for the customers that you do have, spending the time to make sure that they feel well cared for, especially if you've got some extra capacity in your organization because you have lost some revenue, spend that extra time really taking care of the customers you do have, so that because you do have some control over whether they go find it somewhere else. I think that's a big piece of maintaining revenue is really protecting the revenue that you currently have as well. So.
Yeah, and good, Chris, I think the other thing that kind of goes with that is it's not just losing the customers, it's the potential of losing vendors that are critical to your business process and your production of your product, whatever that happens to be. Having a ready market for a substitute if you need it. I know a lot of smaller manufacturing companies that were getting things from China when this hit, or other parts of the world. Their revenue stream stopped because they didn't have any product to sell, not because they couldn't sell it. And it was because they couldn't build it or they couldn't deliver it. And so, really seeing what your critical areas that can shut you down and turn off that revenue stream is the flip side of turning on revenue or having more revenue or decreasing expense.
Very good. Well, I got one more question on the list, but I thought, Rachel, I'd check in with you. Are there any from the crew so far that we want to hit before we wrap up?
Not just yet. There was a couple that you inserted there in the middle, but
okay.
Does anyone have any questions live that they want to ask? Otherwise, we'll go back to you, Chris.
Okay, cool. I'm going to ask one more question, and then if anybody has any more questions, they can feel free to jump in. So any thoughts, McKee and Wayne, on raising outside equity or debt in this environment? At what point should it be done? What are the decision points along the way? And maybe it goes without saying this is a tougher environment. Maybe it's not a tougher environment because there's not as many opportunities for lenders and investors to put money to work in good companies. So maybe Wayne, we'll start with you. Any thoughts on kind of raising capital in this environment, either through debt or equity?
Yeah, I think, one of the most important things is having the cash. If you're looking to expand your business or to use this as this period of time as a competitive advantage to go out and make acquisitions, how do you have access to capital? Where can you possibly get it? Well, the EIDL loan is a great opportunity for that. The PPP, if you haven't already applied, is a great opportunity for that too, because you're in essence eligible for both of those programs. They're not mutually exclusive. So you can raise capital just by taking on a little bit of debt from these two programs. It may or may not be enough from that perspective. There are other lenders that are out there. Local banks have been lending through this process, although what my experience is that they've slowed down a bit, because what they've had to do is basically take all of their lending resources and push them towards management of the PPP program. So now as that's starting to loosen up, I was speaking with a lender just this week, they have more time on their hands to consider the deals that were on the table before this happened and new deals coming in afterwards. So I think banks are back to lending. If you're going to go to a banking or a local banking situation. As far as outside capital goes, there's always, I shouldn't say always, there's usually an opportunity to bring in outside partners from a capital perspective. But again, that's a determination of whether that's the right thing for you and your business.
McKee, any thoughts?
Yes, I want to piggyback on what Wayne said, is if you have thought about an acquisition, that's what we've been counseling our clients for. If acquisition growth is on your horizon, I don't think valuations are going to get any better for the rest of the century. So get on it. We've just had a major decline. That might be a way. It seems like it'd be odd, but to think about, but it might be a way for you to add a revenue without adding so much overhead and be able to expand, make your business much more efficient. So look at, are there ways that you can think about that? The idle loans and, as Wayne said, the PPP loans are there. Family and friends, are always a resource for loans. I would say if you're going to take equity, just be very careful. You know what you're doing. Getting equity from someone is often like getting married. How much are you getting? Are you really clear this is someone you want to be married to? How do you get along? Do they understand that they're going to be just an investor and not a decision maker? Most people don't get that at all. So I found more people unhappy after taking on outside equity than happy, especially if they do it in a hurry. So just be very careful, know what you're signing up for and what you're getting yourself in for, and be very clear of the rules of the game.
Good. Wayne, we had another question from the group. What's the number one thing you don't see companies keeping an eye on right now or paying enough attention to through all of this, given the environment that we're in? There's a lot to have to pay attention to. So what do you see people missing? What are their blind spots?
Yeah, I think one of the big blind spots is knowing and understanding the changes and how quickly the environment is changing as it relates to the Paycheck Protection Program and these EIDL loans. As I said, when we first started, we've had the 19th interim ruling that was issued last week, the 19th since April 4th. That's a lot of changes. And I talked with an entrepreneur yesterday that had decided that they were not going to apply for the loan, the PPP loan. And when I explored that with her a little bit, found out it was because she number one, didn't think she was eligible because she wasn't planning on hiring people back through this time period. She and one other employee were basically taking care of their entire book of business 7 days a week, 14, 16-hour days. That doesn't mean she wasn't, eligible, and she was leaving a lot. She has a pretty large business, and she was leaving a lot of potential opportunity on the table. And she's just starting to get busy now and bringing people back. And I said, this is exactly when you could use that. So, I think that's really where the blind spots are, is people aren't staying up to speed on these changes and how those changes can really impact the business decisions that they could make to be even more competitive than their competitors.
McKee, what do you think?
I think what people often miss is this is the time, as I said earlier, for reinvention and innovation. It is a time where the marketplace is open for change. Get in touch with your customers and clients and find out what's on their mind. See where it intersects with the skill sets that you have. This is not a time to go in defense, just defense. It's a time to go on offense and really find out where do your talents and your customers, existing customers, where do they come together and where can you add more value and how can you be more effective? If nothing else happens out of those conversations except you have better customer relationships, that will pay you dividends for years to come. But I will say that at least 50% of you will find a new opportunity. So what is the opportunity for you? How do you get out of, and that means that you've moved out of fear and you've moved into creative, doing new things, thinking about the opportunities and possibilities. If you have to, turn off the news, don't watch them. I'm like, stop watching.
And don't look at your investment statements.
The world is a prosperous place. So.
Yeah, and I would say what I probably see the most is, McKee alluded to it in terms of people not looking forward enough and spending too much time looking back. I think that process of, several of the clients I've talked to and other folks are a little paralyzed by not so much fear as just uncertainty. Well, I don't know what to plan for because I don't know what direction it's going to go. And that idea of saying, of looking at scenarios, say, okay, yeah, I don't know which way it's going to go either, but put some plans in place for upside, downside, steady state, and figure out what the signposts are along the way. I think that's because people who are missing things are a little frozen right now, and that's typically what they're frozen by. It's not fear, it's uncertainty. And going through, even though it sounds like a pain in the neck to go through a bunch of several different scenarios, the more that you do, it actually kind of brings you peace, because you can say, okay, I know if it really goes south, I know what that looks like. And that's not where it is right now, but at least I know what to do. And it allows you to start to let go of some of that. It gives you some certainty in an uncertain environment, and allows you to sort of pick some paths and start moving forward a little bit. So that's kind of what we've seen in our business, and that's what the advice we've given some folks. So, someone asked about some tools and templates for cash flow budgeting. McKee, you talked about one that you've got. I think that we've got a 13-week cash flow projection that we do for folks. I think both of McKee and I and Wayne, if you've got something as well, we'd be happy to share any of that. We can just work with Rachel to figure out how to push that stuff out to you guys. So.
We do too. We have the forecast. We also have the cash headroom tool, which I use in any marketplace all the time. So it comes with all fill in the bank instructions, so you can do it on your own.
Yeah, there's great cash forecasting tools and some other great information in George Crabtree's Simple Numbers book out there. And we use some of those templates in our business and for our clients.
So
sounds great. All right, well, I think we worked our way through most of the questions that we had prepared in advance. If we don't have any other questions, I'll turn it back over to you, Rachel, to kind of bring it all together.
Okay, well, that's it for this one. Check out more Small Giants workshops at smallgiants.org.